Welcome back, and you're watching Markets at Noon on ET Now. Let's shift focus and talk about a company specifically. We have Rampraveen Swaminathan, the MD and CEO at Mahindra Logistics, joining in with us. They've recently signed a JV. So what are the synergies that they have with this JV, which is a Japanese partner? What should one be watching out from the company going forward? Let's go across to Mr. Rampraveen. Thank you so much, sir, for joining in with us this afternoon. Obviously, let's start with the new JV that you all have signed. Could you tell us about the JV? What is the timeline for incorporation? And also, what are the investment plans for the company going ahead?
Yeah, so as you know, the Indian automotive market is now the world's third largest automotive market. And within that industry, Japanese companies have a very significant position both as OEMs and component manufacturers. Seino Holdings has a very strong domain knowledge of the industry, right, in the automotive sector, and also has very strong OEM relations with the Japanese automotive OEMs. The joint venture which we are forming with them essentially leverages their sector expertise and their OEM partnerships with our local knowledge and local capabilities in India to try and provide Japanese auto OEMs and component manufacturers uniquely designed value-added solutions across transportation, warehousing, and integrated distribution, right, for their business requirements. We hope the company will be incorporated over the next 4 to 5 months. That's the current plan. At this stage, we are making a very minor equity investment in the company. As the business plan gets finalized, we will make decisions on additional equity and capital infusions into the company.
Point taken, Mr. Swaminathan, but you do have a target of this 1,000 crore sustainable kind of number from the JV over the course of next 5 years. How do you plan to achieve that? Do you already have some orders in hand?
No, I think, obviously the automotive space or the automotive sector is a very large consumer for 3PL and logistics services. Both in terms of inbound to manufacturing supply chains, cross-border logistics, and distribution and fulfillment. There's also a very large component of in-plant logistics as well, and a set of value-added services around spare parts distribution and so on for the sector. As we look at the future, we think India will continue to be a strong growth market for automotive, and will further get accelerated given the broad transition happening towards electric vehicles and emerging customer needs for better service quality and better product quality as well. These obviously mean that Japanese OEMs are well positioned in that space today, right, globally as well in terms of products, and also very strong players in the Indian market. The joint venture will really focus on providing those companies a series of services between inbound to manufacturing and product distribution to end customers. And there are a series of services which have been identified as part of those two broad supply chains, which we'll try to cater to. In terms of specific contracts, there are no specific contracts at this stage. As we said, Seino Holdings has strong customer partnerships, both in terms of knowledge of how the customers operate globally, as well as in terms of relationships with those accounts. And that is something which we'll work together now to leverage in terms of the domestic Indian market.
Right, Mr. Swaminathan, also what we want to know is that the company has set a target of around 10,000 crore rupees for logistics service provider by FY26. Could you tell us what will be the driver for the growth here?
So I think around, where we are today, we're around 60% there, right, in terms of the aspiration of being around 10,000 crores. And really, 4 drivers to that. The first one, I think, is the broader transition and growth of the Indian economy. I think as we move towards becoming a $5 trillion economy, as there's a greater focus on in-country manufacturing for other geographies in the world, logistics plays a very, very important part in that process, and therefore we think there will be larger growth in demand in that space, right. The second part is consumption economics. I think India has a very strong component of consumption-driven demand, and that continues to grow as demand gets more premiumized in the country, and as demand becomes, and there's a stronger shift from urban to rural, that will also drive stronger demand for logistics. segments. The third one, obviously, is that with the sector transformation which the government is investing in with the national logistics policy and Gati Shakti, there's a significant shift in terms of infrastructure and digitization across the entire supply chain, and that should allow us to create newer value models for our customers. What this translates for us, obviously, is a growth in terms of a higher growth, which we see in full truckload and warehousing, which is part of our third-party logistics business. That will continue to see growth driven by automotive and FMCG and e-commerce. A stronger growth we expect in our newer businesses, which is cross-border logistics, express and last mile delivery, because there we have small players today and we're scaling up there. And there the growth will come through market share, penetration.
Okay, point taken. But there was also this expectation that overall this year the volumes are going to be muted. Has anything changed with respect to the demand outlook?
So I think FY24 was a challenging year. We did see, apart from the automotive sector and some growth in discrete manufacturing, we did see slowdown for us on the back of slightly slower demand, softer demand in consumer, and kind of capacity consolidation in e-commerce. F25 actually the outlook is better than F24 as such. I think we have slightly slower Q1, but order intake in the last couple of quarters has been really strong. It's really coming on the back of market share gains for us, not so much of our customers expanding to new networks, but us actually launching new offerings and gaining more market share. Therefore, I think from an overall perspective, we are expecting double-digit growth in F25, mid-teen growth in F25, though the growth will be more back-ended than front-ended during the year.
Okay, thank you so much for joining in with us.